Jagdish Malkani, member of the NSE and the BSE. Jagdish, thanks for taking time out and joining us live on the show. First up, market's looking pretty weak today in trade as well. Nifty's broken the level of 5,000 as well in trade. Where do you see the bias from here on? Do you think we'll likely see significant pain over the next couple of weeks?
I'm afraid so. It does look, it's got painful deja vu memories of 2008, early 2009 coming back. Whether this is the final sort of capitulation, the last hurrah, I'm not so sure, frankly. I mean, I myself didn't expect it to go crashing below 5,000 the way it has. And frankly, the carnage in the lower strata of the small and mid caps has been even worse than what the indices show. So yeah, it could get worse before it gets better. And frankly, this sort of comes with the territory. The sad part is that our markets have become rather shallow. It's still, if I remember right, 57% or whatever of the overall market cap is held virtually in the Almirah. Its promoters, government, etc. doesn't move. Domestic financial institutions rattled by all this corruption stuff, etc. So stick with the big stocks. The retail investors run away. So it's back to the Gora factor, 18% that they hold, when they vote with their feet or vice versa. That's the effect that we are seeing now. And skittish global markets, added to which this latest Anna Tamasha is not helping matters, I suppose.
Indeed, and on top of that, Jagdish, I mean, there's the sectoral concerns as well. Now there's talk about rising NPAs for banks, credit growth slowing down, and in turn you're seeing the stocks getting thrashed. Are the concerns overdone, or would you say perhaps one can look at these opportunities to buy into some of the banking stocks from a long-term time frame?
I think the latter is very true. I mean, it's, when the bears come out to play, all this stuff comes out. I mean, this is all known stuff. If anything, if one looks at the glass half full, I mean, inflation has started to sort of show signs of tapering off. We had some reasonably good news the other day. All the signs are that, the food and other, if this inflation can be tempered and, possibly we are in for a couple of more rate hikes, but once the market looks way ahead, once the end of the line is near, then, then it's back to banking, PSU banks, the same old factors. Yes, NPAs, etc. Of course, there are concerns, but all that seems to be in the prices already. I mean, the way, especially the PSU banks have been knocked, I think is way overdone. But who can say where this will stop?
Well, Jagdish, do you get the sense that the September credit policy of the RBI could well be the next trigger point for the market, because any kind of announcement on possible trajectory of rate hikes could be welcome, because we're expecting, even if they do a 25 bits hike, that will probably be the end of the rate hike cycle, right?
That's what I'm suggesting. I mean, I think it is on the cards, but the market's already discounting a lot of all that. So yes, SBI provisioning, all that is known. If anything, the heartening news in the recent results were the NIMs, and clearly creeping up in these hard times. In particular, I think this PSU bank pack, and it's very irrational even in the private bank stock behavior. If you see how rock solid HDFC Bank has been, and you compare it to Axis Bank, is a shade behind, if you were to take the perception in the street and the marketplace, etc. But now Axis Bank has been completely, bludgeoned out of shape. I'm not so sure it's all totally rational. It's more to do with holdings of FIs, etc., hedge funds, whatever.
Jagdish, what about the other side of the axis, which is your concepts, thematic stocks, the likes of Jubilant, Titan, and the rest, which have been quoting at high valuations, giving fantabulous returns. Do you think those valuations are justified, because that perhaps is the only hiding space right now?
Absolutely. I mean, and it's all a question of, what they call in street lingo, my bap. If they are in strong hands, whatever, funds, big players, etc., some of these stocks are certainly irrational. But let's not get away from it. The market is a, Bhav Raja, whatever they call it. Some of these strong stocks have remained, extremely resilient, and even in this carnage have held their own. I mean, in the biggies, if you see, it's ITC, it's, we can rattle off the two HDFCs, Hindustan Lever to a certain extent, Bajaj Auto, Hero Honda, those have held their own very well, whereas the weak really, and it's equally true for some good quality mid caps, which stay irrationally high, but nothing affects them, even these days, and the weak gets really weak.
Right. Jagdish, what about the real estate back? It's seen quite a lot of pain over the last couple of days on the back of reports of the Competition Commission probing some of the companies. DLF has been slapped a notice of about 600 odd crores. How do you view the real estate pack in general?
Well, it's been a very unfortunate sector. It's been horrendous, and I think it has a distinctive record of actually breaching even those 2008 lows, some of these stocks. So, I think it's overdone, and there are some good stories in there, Godrej Properties, etc. But clearly, their woes of, the cup of woes is brimming over, between high interest rates, overdevelopment, having paid too much for some land purchases. Now this latest Competition Commission, frankly, I'm not so sure what the courts will make of this. I think it's a little over the top, this knock on DLF and maybe its ramifications. But yeah, clearly, as I said, in line with what I was saying earlier, the weak get weaker. So chances are, if this bloodbath continues, reality is in for some more knocking. But clearly, there's value in there now in some of these stocks, and especially the higher pedigree stocks like, as I said, Godrej Properties or even a DLF, frankly, at this value.
So, Jagdish, at a sticky time like this, when the macros as well as, the global data points are all, playing spoil sport, what could be an ideal portfolio if you could recommend 5 stocks? Or then would you say cash is king in times like these?
No, clearly cash is king, but let's face it, one should be nibbling. It's, the old falling knife business. Depends where your investor is at. Now, most of us are in the category where already the gunpowder is all used up, so there's little moving space. But clearly, those that are fortunate enough to have that kind of thing, one should be clearly, from a medium to long term view, many attractive stocks, picks, etc. And if anything, I think some of it now is in the mid to small cap category. I mean, to rattle off some stocks in the biggies, I think, as we talked about banking, I think some of it is overdone in the PSU pack, and stick with the best. These times, who knows where this whole global carnage, Europe, there are so many issues out there, emerging markets, etc. So State Bank of India straight away is a great proxy for the PSU bank space. In the private bank space, as I talked about Axis Bank, there are some other smaller ones which are also extremely good, South India Bank, whatever. And then I think in the IT pack, even that's been overdone. All this is, there's nothing new in what came out with this downgrade. So stick with TCS, stick with Infosys. In the mid-cap gallery, I like a stock called NIIT Tech, doing extremely well, resilient, acquisitions, etc. Then if you move further, there could be sort of news-related plays. I like EIH, East India Hotels, with this whole takeover code changing and those two giants circling around each other, Reliance and ITC with 15% each. It's only a matter of time before somebody shows his hand, and that stock could really move. You've got ILFS Transportation. I could rattle off a whole lot of them, but one should be nibbling. One doesn't know at what stage this whole, ideally, as the market stops, caving in.